Hi, this is Mike Sheehan, and you wanted to know the difference between whole life and term life insurance. Real quick, all right, just a couple of minutes. I'm going to give you kind of high level here. Whole life, it's a permanent form of insurance. What's going on with whole life is when you pay your premium, part of that premium is going into a side bucket, and that's accumulating over time. It's being credited interest by the insurance company. And the premium is going to stay the same and your coverage is going to stay the same. The benefit, the huge benefit with whole life now, and I own whole life insurance, is the fact that as you get older, you're going to have two big options available to you. One is depending on how much cash accumulates, depending on the size of the premium that you're paying, you could use that money as income. And what's significant, it's not earned passive or portfolio income, so it does not show up on your tax return, and it's tax free. Or you could take that cash value and tell the insurance company, take the expenses that you need to continue paying my policy out of my cash value and keep the death benefit in force. So now you're continuing to have the coverage that you've been paying for, but now you're not having to pay any new dollars into it. So that's huge as well. Now, in term insurance, it's just as the name implies, it's for a term. The most common term policies I sell to my clients who are asking for that are 20 and 30-year term, which means for 20 or 30 years, that premium and that coverage is going to stay the same. It is less expensive than whole life because you're just paying the expenses of the insurance and nothing more. The downside is at the end of that 20 or 30 years, the policy is going to stop, and you're going to be forced into a decision. One is, if I want to continue that, if the company gives you that option, you're going to pay a considerable higher premium because you're 20 or 30 years older, depending on the policy. Or depending on the company, that coverage may stop and you may not get the option. So now you're going to be stuck in a position where if you continue to need insurance, you're going to have to apply or pay a much higher premium. So I have both, all right, for different reasons, and one or the other may be best for you. To determine that, go to the lower left and click on the link. You're going to see www.yourlifeinsurance411.com, or click the link below. It's going to take you to my website, and then in there you're going to see in the right-hand corner, put in your name, your email, your phone number, and then click the quote me button. And that's going to come back to me, and then I'll reach out to you and we can have a conversation. We can craft a plan that's going to work best for you and your family, and we can implement it, and we can do it all online. So again, go to the lower left, click the button. It'll take you to the website, put your name, your phone number, your email address in there, click the quote me button, and I look forward to talking with you real soon.